comments or anything you'd like in the chat section for now, and then we'll either address them throughout the session or we'll take them offline with your BDMs later. But for now, we are so excited to have Latrobe here. This has been something that's been coming in the works for a long time. So over to you guys now.
Same here, 247. Okay, now I got two scenarios for you. Number one, he is currently.
Good afternoon, everybody, and welcome. Thank you for taking the time out of your busy schedule to join Trobe Financial today. Trobe are delighted to be partnering with Lendy and look forward today to be able to presenting our full product suite to you all. My name is Michelle Bannister and I'm Director Head of Distribution. And today I'm delighted to have my colleagues with me in Sally Carmichael, our National Strategic Partnership Manager, Andrew Cliff, Executive Head of Client Partnerships, and our in-house credit guru, Chris Dargaville, here to answer all your questions throughout the presentation. Where do we start? Latrobe Financial. Let me tell you a little bit about Latrobe. This year we celebrate our 70th birthday. This means that we've been through recessions, periods of high inflation, GFC, changes to credit and lending regulations, and through all of this, we have thrived and grown. The last 3 years in particular has been a good growth period for Latrobe, and more recently, in May this year, we were purchased by Brookfield, one of the largest funds managers in the world. Brookfield own assets and business across 30 countries, with approximately US $725 billion in assets under management. It's fair to say we're in good hands moving forward. Latrobe Financial itself has 14 billion funds under management, 400 staff nationally, and currently assisting in excess of 87,000 customers throughout Australia. We're proud to say that we have the largest product suite in the non-bank space. Anything from self-managed super fund through to residential, commercial, development, bridging and residual, just to name a few. And we'll certainly dive into these deeper throughout the presentation. We have a really interesting funding model in that we run our own private credit fund with circa 8 billion assets under management, providing funding that fits outside that classic bank warehouse facility. This allows us to be able to consider loans up to 25 mil, be able to consider more corporate and involved structures, and also to be able to look at a number of different specialties in securities, which we will also touch on further. I have personally been with Latrobe Financial for over 25 years, and fair to say that I feel we are in the best position, product-wise and pricing, to be able to help Lendy Group moving forward. A couple of facts about Latrobe. We have a dedicated team of 28 BDMs nationally and growing. Expect that to sit close to 40 to 45 BDMs by year's end. Currently, our BDMs are credit skilled across our full product range. Anything from residential through to high-end commercial and construction development is your one point of contact in your Lendy BDM. In regards to our product range, we really do cater for every life cycle throughout your client's needs. Having the broadest product suite really does place us well in that non-bank space. Our goal at Latrobe is to partner with Lendy and help you grow your business rather than move your business. And we're really confident we'll be able to do that moving forward. People may say, why Latrobe Financial? And we really break it down into 5 key areas. The first would be choice. We cater for every life stage of your client's needs. Really what we're looking at is around 10% of our population would prefer not to deal with a major bank. And that's where we are here to provide a solution for you and your with 7 decades We're here to listen to you and your clients. And really, it is the human element and the human touch that still remains part of our service proposition. Service, dedicated BDM and credit staff, the one point of contact for you across our full 19 products. Really does show that our BDMs are experts in helping grow your business. Products. We look at how we can help you and your clients moving forward without any clawbacks on our products, and really like to see ourselves as effectively the one-stop shop for all loans that you need. And then broker direct, something that's really close to our hearts. 70 years of looking after the broker channel, 97% of our volumes come via broker. It really does show that our commitment is there to you, the broker, and your client, so you won't be seeing any channel conflict from La Trobe. With that, I'm delighted to now pass you over to Sally Carmichael, our experienced National Strategic Partnership Manager, and she'll walk you through our residential portfolio and also to the exciting tech initiatives that we have to offer you at Lendy. Thank you.
Thank you, Michelle. Firstly, I'd just like to say a huge thank you to all of the Lendy Group. I know that this has been a really long time in the making, and now that we're at the final stages, so we've now launched and we're now doing this great webinar out to you all. Any information on here today, you can just contact your BDMs and get further information. But I just want to talk to you firstly, before we go into products, just about the innovation around Trobe Financial. You'll just see on this screen that we've got a fast track checklist, and what that basically enables you to do is, if you put your application together in full and provide your valuation alongside it, we can do what we call a fast track application, and this allows you to get an answer back within 48 hours with a formal approval. We also have the ability to do your apply online, which allows you to do what we call an easy lodge application form. So this basically gives you an easy application form and not your regular 12-13 pages long. It's just a lighter process, so you get a lot quicker outcome. We also allow you to do IDU, so if you've not seen your client face to face, we allow you to download the IDU app and your client can access that, and again, it's an easy option for the client to get their identification done. We also give you access to the Property Hub. So the Property Hub is through Velocity and Valex, and what that does is it allows you to order your upfront valuation. Velocity is for commercial and Valex is for residential. We also give you access to the broker portal. So you'll see on the broker portal, we've got a lot of functions that are available on there, but you know, some of the main ones are basically you're ordering a valuation, downloading any broker forms that you need, and just make sure that you're keeping up to date with any industry news. We have an interactive product guide. So the product guide gives you everything from your rates to your fees to your risk guide, and it gives you a brief outline of what the policy guidelines are. So you've got a very full product guide there. Most of our products offer DocuSign, so you don't have to do a manual document at settlement. You can do that, just send it onto the settlements will send that onto the email and they just do a DocuSign and straight back. Again, it just makes the process time a lot lower. The last one on there, what I wanted to touch on, was our client partnership team. Now, this is really integral to La Trobe, and it's one of the unique offerings that we have in the industry. So we actually have a partnership team that provides support for the BDMs that are dedicated directly to you. So if your BDM is in a meeting, if they're on a PD day, if they're off sick, then you've always got somebody that's got the BDM's back. So we've got a lot of support there. So the client partnership team will support the BDM, they'll answer emails, they'll make sure that your call is taken and all your scenarios are dealt with that within that timely frame manner. So it's not like some of your other lenders where, you know, you'll get a BDM go on leave and then the emails sit in a black hole for a few days. We've actually got somebody there who will pick that up for you. So after innovation, we just want to speak about some products. So with our residential products, we do a light doc and a full doc product. So as Michelle mentioned, we have no credit reporting, and we don't do a credit score. So we don't need any statements from any other financial institution if we're not dealing with them. So if we're not doing the refinance, if it's not part of this scenario, then we don't need statements on those. It also offers the best servicing calculator on the market, and there's no DTI requirement. So if you've got those investment properties, you're not having to fulfill a credit score there as well. We're a story-based lender, as Michelle also mentioned. So what that also does is it gives you the option that you've got a person that is looking at your application and they're working on the story. So it may be that your client has had a life event or an incident that has happened within the past 1 to 5 years. We understand that happens with every client. So we want to make sure that you get the best outcome that you can, and all our assessors work on a story-based scenario. So it basically shows you that we're not policy driven entirely, that we can kind of look at some deals that we think make sense. Our loans go up to 25 million, so we are at 80% up to 2 million, 75% is 2 million to 5 million, and 70% is 5 to 25 million. Now, just keep in mind that that can be a single security. It doesn't have to be a multiple security offering. You can do that with just one property. We do owner-occupied and investment, obviously, but owner-occupied, we do a little bit of a special. So if you've got an owner-occupied property for a refi or a purchase, we give you a slightly cheaper interest rate, but we also reduce the application fee as well. And that gives you up to 80%, up to $2 million. We allow you under a light doc to do an accountant's borrower declaration for serviceability, or you can also give us 2 quotes as BAS. So the option is yours, just depending on what you think is the easier way. If you do have a full doc, we can go with 1 year financials if you give us 2 quotes as BAS to go along with it. So we can take 2021, we don't need 2022 as yet. You just provide the most recent 2 quotes as BAS, and we're happy to run with that. You'll see there's no LMI. We don't go above 80%, so you don't need LMI there. Credit impairment is considered, and again, I just spoke about it, about a life event. So where we are different to the other lenders is that most lenders will tell you you need to be within a certain dollar value, within a certain time frame, and how many defaults or actual events that you've got. With La Trobe, we're very different. So we look at it as a life event. So for example, if you went through some hardship, whether it's a divorce, 2 or 3 months ago, and you may have a $40,000 default, it may have only been lodged 2 or 3 months ago, we will still look at that under our B rating product, which is very reasonable and very attractive within this market. We give unlimited cash out, and that can be for business and personal use. It can also be for working capital and help you to build your business. So just let us know exactly what you need it for, and we can help you with that. Debt consolidation, so that is unlimited. So you could have 18 credit cards and we'll still look at that scenario for you. So there's no limit there. Discharge bankrupts are considered. We can also allow you to pay out ATO debts within our standard products. So ATO debts can be partially paid. We do prefer them to be paid out, but there are scenarios where that's just not possible. And if you've already got a payment plan in place, then we can look at that and see that it's a good deal and make sense of the scenario. ABNs, yes, we like it to be a 12-month ABN, but there are particular instances where you will only have a 6-month ABN to be provided, and we can consider that in certain case-by-case basis. And GST is only if it's required. So that takes us through our residential lending, and we've got to cover off on an SMSF. So self-managed super fund, we do both residential and commercial. I'm just going to speak about the residential today, and Andrew will speak about the commercial side of it. But basically with SMSF, our maximum loan amount, LVR, is 80% on residential, unless you've got an inner city property, and then we go to 65%. But where you'll see that we're really unique within the industry is that we only have a limited recourse on loans. We don't necessarily need evidence of financial advice. We will use 80% of the rental income, and we can also use individual income sources if we need to. So if the SMSF income and the rental income doesn't quite cover serviceability, we can then go further and look into the individual's assets and utilise that as well. So assets and liabilities, and make sure that it meets over the line. And if it does, then we'll do it under a light doc scenario. No clawback. So we'll keep reiterating that, no clawback on all policies. We have no minimum fund size requirement and no minimum liquidity requirement either. You'll see that our calculator is very easy to use, whether it's an SMSF or whether it's a full doc or light doc. You'll always find it a very easy process. And all loan terms are up to 30 years for both residential and commercial. So I think that is me for residential. I'm going to pass over to Andrew, who's our expert on development and commercial, and he'll go through some of those products with you now.
Thanks, Sally. Thanks, everyone, for your time today. I know it's a long session, but hopefully we'll fly through this and give you guys a bit of a feel for some of the options that could be available for you in terms of the client base that you have. And obviously, we're looking at ways that you can build your client base and provide further options to your client base. Just touching on the commercial side of SMSF, what I'd like to do is just to maybe highlight something that you might not know. Commercial, obviously, we're talking commercial property, but from an income perspective, we might have customers that are purchasing a commercial property in their super fund, and the property doesn't yet have a tenant in that property. We can consider the market rental for that particular property, on the basis that the fund will rely on what the valuer tells us in relation to the letting up period for that particular property. The valuer may say that it may take 3 months to get that property letted up to that market rent. As long as the fund has the capability and the funds in their fund to cover that period of 3 months, we can then actually use the rental income in servicing for that particular commercial scenario. So to me, that's something that a lot of other lenders wouldn't be able to provide, something that we're comfortable to consider along the way. Bridging loans is another product, a niche product that we have. Again, in terms of this, just to whet your appetite as to things that may particularly come across your desk that you haven't been able to place before or find a home for, we can consider bridging where we consider just one property, a bridging loan of one property. And this could be an example where potentially somebody's buying into a retirement village or a retirement home, for example. They own their current property, clear title. There's sufficient equity to cover the cost of the purchase. And we can consider that bridging loan with just taking a mortgage over the one particular property. Another great bridging loan example is our bridging construction facility, where people can stay in their current home, build their home of their dreams, not have to move out of their current home when they sell it, wait until they finish the house, move into it, do some renovations on their existing property and then sell it. We'll allow a bridging period of up to 2 years, which can cover that. The servicing aspect of bridging loans is that we only require servicing on the residual or end debt position. So if there's a no end debt position, interest is capitalised during the bridging period, so we don't need to worry about servicing during the bridging period. And as with all of our products and facilities, in terms of the commercial side of things and development, with a bridging loan, there is no early termination fee. So if the loan pays out early, there's no additional costs or fees. The interest cap is an interest budget. So if the facility, there's a 2 years worth of budget on the interest, if it pays out after 12 months, the residual interest budget just isn't used, so the client doesn't have to pay that at all. So moving on from that, we move into our commercial product range. So basically with La Trobe, commercial product or a commercial loan is basically where the security is a commercial property. So you may come across some other lenders where if you're looking to refinance a commercial debt that's secured against a person's home, they will write that as a commercial facility. If we've got a commercial debt being refinanced but there's a residential property as a security, we write that loan under our residential suite of products. So our commercial product offering is basically for commercial security properties. So that's factories, shops, industrial property as such. Now we can consider individual loan transaction sizes up to $25 million in this space as well. And LVRs obviously from 75% for deals under $3 million, and then case by case on a security property for loans above $3 million. We also offer a full, a true commercial lease stock product as well within this space, where the lease income is the sole standalone servicing requirement for the commercial facility. So we have an interest cover ratio of currently 1.2 times interest cover, which is again, I believe, market leading. So if the interest cover is demonstrated 1.2 times, the loan stands alone, and we don't take any other facilities or commitments into consideration in our servicing requirements. All of our products commercially can have the cash out side of things to cover off exactly the same purposes as our residential offering. So, and we can, interestingly enough, pay out ATO tax debts as well in our cash out requirements. So a big one for some commercial customers that may have some outstanding tax liabilities that they want to cover off on. Construction, we have two main areas of construction. The first one is our single build. So that's where, and we can consider up to 2 properties being built under our single residential. So depending on location, we can consider LVR up to 80%. We can consider building construction loans under our light dock product offering, which I think at this stage in the industry and in the market, we are the only light dock provider of construction funding at the moment. So with quite a few lenders withdrawing from the market in recent times. So that's a 30-year loan product, up to 2 years for the construction period. And during construction, the client pays interest only on the drawn balance each month. We've just extended our construction term from 12 months to 24 months, which is in response to the changes that are happening in the market in terms of the timing for buildings. We've noticed that, with the inability to get product and stock, that build times have dragged out. So we've again adopted our product to cater for that and moved our construction timing out to 24 months. It's a 30-year loan term, so the loan then reverts automatically once the construction's finished to our standard residential rate, whether it be light dock or full dock, for the residual period of 28 years on the loan. So the second facet of our construction is our development funding. So everything that's 3 units and above is considered development and considered under our commercial terms. For that, the criteria is that we need a corporate borrower. For construction, interest is capitalised on those facilities, so interest is built into the construction period. And we can consider, again, individual transactions on an individual property up to $25 million. Deals under $5 million we can consider with no pre-sales. And we can consider on a case-by-case basis bigger deals with varying levels of pre-sale, or in some instances no pre-sales on deals up to $10-15 million where the property's right and the location's right. Big one is that there are no line fees on our development and construction funding lines, so you're only paying interest on the drawn balance each month. So that basically works to be an effective rate of around, if you assumed a 60% usage, about 60% of the effective rate with no line fees. No early termination fees on our construction and development funding lines. And again, with the interest budget that's built there, if the loan is completed and the construction is completed and the properties are sold and there's interest budget left, it's just not charged, it's just not used. So a big win there for us in respect to that. Moving on from construction, we then have the opportunity to look at residual stock funding. So developers that have completed, we define residual stock as a completed development where the unsold units are to be sold, as distinct from a completed development, let's say, for example, 20 units in the development and there's 6 units left, that the developer wants to keep those units for 5, 6, 7 years or whatever it might be. We can then consider, when they're going to keep those on a long-term basis, we can consider those 6 units under our normal residential lending criteria. If the properties were to be sold, we can allow for another period of up to 2 years where we allow the developer to sell down those properties. Again, the interest is capitalised, so there's no servicing required during that bridging period or the residual stock period until the properties are sold. Again, there's no early repayment fee on those facilities. And again, the interest budget, if it's not used, it's not charged. With all our products, there's no clawback. So from a bridging loan through to a development loan, which are very short-term, potentially short-term facilities, under where a normal lender would have a clawback period implied, we have no clawback. So you can safely write a facility which may only last 6 months without any fear of having any clawback of your upfront commissions. I'm going to hand back over to Michelle now to summarise where we're at.
Great, thank you, Andrew. Thank you, Sally and Andrew, for a fantastic update across our full product suite. I'm sure most of you are sitting there thinking, how do I grow and diversify my business after hearing those offerings? And effectively, that's what we're here to do. We all know that 70% of Australians at the moment use a mortgage broker in writing a loan, whether that be residential or commercial. And it's pleasing that at least 10% of that goes via the non-bank channel. So being able to provide that alternate solution to the major banks. I really think this is a good opportunity just to summarise and call out a couple of those niches that both Sally and Andrew have touched on, and really hone in on what is our point of difference at Trobe Financial. I think it's very clear that construction and development is very much our space. The only lender that plays in light dot construction, up to that 80% for single build. You've heard today that cash out is a big one for us. Effectively, access the equity that your client deserves in their property, whether it be residential or commercial. We are not going to be Big Brother watching over them as to what do they use those funds for. So long as it's a reasonable purpose, we will look at cash out with unlimited amounts. I think to diversify your business, even to look at something in the line of non-resident, overseas income source converted at 90%, could be something that you look to sort of open and spread your education in regards to. No liquidity around the SMSF is an outstanding one for us and a real point of difference. I think too, the main one that really stands out is the no clawback across our full product suite. We understand that we are not going to be the sit and stay long-term lender, and we've positioned ourselves in the market accordingly. You bring your clients in, we will offer them the solution, we will get them on track, and we understand that they're then going to look at their mainstream options in 2 to 3 years. And we are not going to come knocking on your door looking to claw you back on your upfront at all. So that really just calls out some of our points of difference. I think keep us in mind really for those higher end transactions. Anything 3 mil to 25 mil is something that's probably new to panel for Lendy and Aussie. So we're certainly here to help and more importantly, educate in that space. It's really pleasing to see so many questions coming through, around our 1 year financial product, which again is market leading. A lot of questions around that cash out is coming through. And prior to Sally sort of summarising our points of contact, we may even just go across to, we've got our resident expert in the room, Chris Dargaville, to maybe call out some of the questions that you've seen coming through, Chris, and Andrew and Sally and myself can help with those.
Absolutely. Thanks, Michelle. And although you can't see me, it's great to be here, guys. Thanks for coming along. And we're really excited about the partnership with Lendy. So, it's great to be here. First of all, we have a question from Vaishvani Shah. We've spoken a little bit about ABN registration periods, but what about GST registration periods? Andrew, maybe I'll go to you.
Yeah, so again, it's case by case and what makes sense. So there's no requirement for any particular period of time for GST registration. Understanding that there is a minimum requirement legally that if someone turns over greater than 75,000, they have to be GST registered. So if somebody's been registered for 3 months and they're declaring income of $90,000, it's reasonable that for the period before that time that they didn't need to be registered for GST. However, if they're coming to us and declaring $400,000 for income, you would be asking the question, how come why have they jumped to a period where they weren't registered for GST when they really needed to be? So again, we consider that on a case-by-case basis. So there may be some justifiable reason why it wasn't. But we would, that would be how we would view that circumstance.
Great. Thanks, Andrew. Michelle, I might come to you now. Sure. We've got a question from another Michelle Durant. Regarding short-term employment, or borrowers on probation. What sort of restrictions do we have? Can we consider shorter term employment? And what sort of documentation may we like to
Yeah,
see?
absolutely. Great question, Michelle. Nice to meet you on the screen. So in regards to short-term employment, we're very much around what is their continuous employment history look like. We'll consider casual, we'll consider short-term, we'll even consider probation, but what is the story prior to that position? Have they been in that industry for over a 2-year period? Are they progressing and moving from a PAYG position into a self-employed position? What does the history look like? And it really does come down to that story-based lender. But, answer to your question, Michelle, yes, we will consider short-term employment. Yes, we will consider probation and casual. But it's very much about what does the history of that employment look like.
Great. Thanks, Michelle. Andrew, I might come back to you as well. We touched on it earlier, but it's obviously a pretty attractive proposition that we have for our flexible pre-sale options. Do you want to maybe shed some light a bit more on our pre-sale options, where we would use them, where we would apply them?
Yeah. So generally, as a rough guide, any loan facility under $5 million in the development space, we would consider that without pre-sales. And we do a number of those deals in the 4 to 6 unit range in both metro and major regional locations. Some of the larger deals, when we get above $5 million, where we're looking at transactions where, for example, if you're in some of the leafy suburbs in Victoria, New South Wales and Queensland, where, the advantage is for a client to see that, or a potential purchaser to see the finished product before they make a decision to buy. So we understand that can sometimes add greater value to the end sale price. So in those cases, we would consider that on case-by-case basis. So we've done, I think a 20-unit development in Hawthorn in Victoria where we did that. It was a lower LVR and I think an overall 60% LVR, where we were comfortable to do that on the basis of the end product being a saleable product rather than pre-sales being required along the way. So again, a very flexible arrangement where we consider things on a case-by-case. And we look at the other mitigants around, where's the location, is there a lower LVR on offer, the experience of the developer, anything they've done previously in that suburb that supported that kind of sales evidence being there in the past.
Great. Yeah, as we can see, it's pretty flexible.
Yeah.
Now, I'm not ignoring you, Sally, but I'm going to go to Michelle again. SMSF loans. Now, when it comes to documentation about, verifying the contributions, what are we looking for there? Do we have flexibility when it comes to, are we only providing tax returns? Is it tax returns for 2 years or 1 year? Or can we go off pay slips, etc.?
Yeah, so I think the good news with our SMSF and all our products, to be honest, is it's the one application form. Whether you're writing a mum and dad residential home loan, an SMSF, or a $25 million development loan, it's the same documentation you're dealing with. On the SMSF side, we generally look for 12 months financials in that space, but certainly open, to be flexible around what the contributions look like, and so long as, again, we can justify the reason if there's been a drop in contributions and now they're increasing, certainly happy to consider those on a case-by-case basis. But good news is it is only the 12 months.
Great. And just while we're on the SMSF, are we doing corporate or individual trustees? What can we offer there?
Yeah, so preference, and correct me if I'm wrong here, Sally or Andrew, but preference is for corporate. I know that we have considered individual on a case-by-case, potentially if the LVR is low enough, but yeah, preference is certainly corporate.
Right. And I'm going to throw this one open, whoever can get in the quickest. Now, business or ATO debts using an owner-occupied security. Can we class it as an owner-occupied loan? Using quickest.
Yes, we can.
Yes, we can.
Absolutely.
Sally, you got one. We've got plenty of questions coming through and appreciate those, but we're probably not going to get a chance to answer them all, but we will get back to you in time. And thanks for being a part of it. Thanks for asking lots of questions, guys.
Beautiful. Oh, well, that was a fantastic session. There's just one more thing we've got to cover off on. So after after all of that product information, all of the diversity in products that we've got, you might be asking, oh, well, what else can they offer? We can also let you know that we partnered with Qantas. So with Qantas, we give you up to 250,000 points. So for example, if you get your application is $1 million, then you will automatically get 100,000 points. And then from that, we also give you a loyalty 12,000 points per annum. So, and that's all free of charge. So just bear that in mind. You know, it's good to tell your clients about that as well, and you know, give them a benefit. I know you can get to Hawaii and back on about 200,000 points, so that might be a really good one for you guys. But basically, yeah. So I'll just finish off from my side before I hand over back to Michelle, just to give you a brief wrap up. But I just wanted to point again that we have dedicated individual BDMs to each individual state. So you'll all have a BDM to work with, and they'll be seconded by the state managers with each of those states, and then you've got myself there as well as a third backup. On top of that, you've also got the client partnership team, so they support the BDMs. If the BDMs are away or anything needs to be done, the client partnership team are those guys that, you know, are there on the phone, they're there on emails, and they're there to cover everything that you need, so you're never left out in the cold. We're there to support you. Now, one of the other good things about your BDMs is that they're fully experienced in residential and commercial, so you don't have to go to a separate BDM to get a separate scenario or offer. They're experienced in all of our product ranges. So you'll see there, sorry, just on the screen in Queensland, there's just one little face there, Michelle Rose. She's absolutely fabulous, but we have got another BDM that's just going through her training now. So once they're completed, you'll have that secondary contact there in Queensland as well. And as we grow, we're very much committed and dedicated to you guys. So as we grow, we'll add more BDMs onto your panel as needed. In the meanwhile, please just get your emails through, contact your BDM, put all those mobile numbers into your mobile so that you've got your contact direct, and we'll be more than happy to work with you going forward. I'll just pass back to Michelle, but thank you so much, guys.
Great, thanks, Sally, and thank you, everybody. Really appreciate you taking the time out of your afternoon. As you can see, we are super excited about partnering with the Lendy Group and really looking forward to the opportunities ahead. We've been doing this for 7 decades, so we know what we're doing and we know how to help you grow your business. So thank you again. Our BDMs will be reaching out for a face-to-face meeting with you all, and we look forward to working with you in the future. Thank you all.